Joe Brady, welcome to the REI Diamond Show. How are you today?
I'm doing great, Dan. Thanks for having me.
Yeah, for sure. So, Joe, we'll talk about his background with Walgreens as head of national real estate. I believe we were talking before we hit record about how we're both Philadelphia guys, then Chicago guys, and then Florida guys still to this day. But with that, do you want to give a brief background of your career history and how that's led up to what you're currently doing, Joe?
Sure, happy to. I've been in commercial real estate for 35 years or so, and during that time, I've had a chance to sit almost at every seat at the table. I've been on the capital markets side, I've been on the brokerage side, the advisory side, I've been on the principal side. And so I really grew up in the retail business and was a part of some very high volume rollouts, including Hollywood Video, back when
Wow.
that was actually an industry, right? There's only one Blockbuster left. Did you know that?
Somebody mentioned that 2 years
Yeah.
ago. It must be like a museum now or something. I mean, it
It,
can't be.
it, it's a swag shop. It's in
Okay.
Bend, Oregon, of all places, right? So that industry doesn't exist, but was part of the team that rolled out 2,000 of those stores, and then we took that business, we took the skills and the relationships and rolled that into an outsourcing business that we ran from 2000 to 2008. And T-Mobile USA became our biggest client. So we opened another 2,000 of those stores, the first 2,000 T-Mobile stores in the US. And I wound up selling that business to JLL January 3rd, 2008. So uh, for those who don't track history, that was really, really lucky timing, and I'll take it. Spent time at JLL running the retail practice, ran the banking industry group. So I was doing a combination of retail and office, and then I had an opportunity to join Walgreens as head of real estate. And so I was there for almost 4 years. And right before the pandemic, I left and joined a company called the Instant Group, which is the Airbnb of flexible office space. So if you can imagine joining this company, I was the CEO of the Americas. The company was based in London. It's the Airbnb of flexible office space. It also builds out office space for Fortune 100 clients, and then Instant would run those spaces. So really creating a lot of agility and flexibility in the office world, which really didn't exist. I started that December of 19. So 3.5 months later, the pandemic hit, and everyone was looking around thinking, what are we going to do about office space? No one was in the office. And so for the next 4 years, we literally quadrupled the revenue and the business, building out offices from Buenos Aires to Mexico City to Toronto, all throughout the U.S. And so it was kind of fun. But while that was happening, I kept hearing all of the same death knells and chatter that I heard 10 years ago about retail said about office. And so it really struck me that I had seen this movie before. And so I started putting some thoughts to paper about what we learned in the retail world and what the office industry could learn from retail, given that there were two really dramatically impactful forces. One was this acceleration of technology in our world, and two, how consumers were reacting to that acceleration. I guess the short of it was that real estate wasn't keeping up with those changes, and retail had to learn the hard way. And office right now is really going through a tough period.
Yeah, absolutely. It's ironic. So my very outside observation of Walgreens story, and this is totally uneducated, so take everything with a grain of salt. This is just my like gut feel. But I remember from like 2016, 2015 through 2020, you can usually track like distress or the kind of assets that are starting to fall out of favor on 10X, right? The commercial real estate auction platform or any
Right.
other auction platform. When the distress starts to occur, I mean, it was like 2010, 2009 that I started, remember personally seeing like shopping malls and retail centers start to hit the auction sites. As the retail death knell, as you called it, was like starting to pop up. And I think that the trend in retail seemed to happen over a lot slower period. Like what happened in '08, 9, and 10 and all the bankruptcies was kind of it was a cycling out of a lot of weaker retailers that went bankrupt and a lot of vacant space came online during that time period, but it felt a lot slower than what we witnessed in office to me. And again, this could be me talking out my ass and I don't have the numbers to back it up, but office was like 1, 2, left, right, and a knockout punch by COVID. It was like this instantaneous thing with office because Zoom went from whatever it was, $40 to $400 a share, and their subscriber growth was through the roof. And we're doing a Zoom call right now as a result of that instant tech shift from the Black Swan event of COVID. And I remember Walgreens being in the retail space, they started showing up on the 10X auction platforms, and they were selling for 2.5, 3.5 million, sometimes less, sometimes more. And then when COVID came and the COVID money and the vaccines came out, I mean, there wasn't a single Walgreens site available anywhere in the auction. I'm starting to see them kind of pop back up again. So it's interesting. I'd be curious what your observation, if you're allowed to speak on it, with Walgreens and maybe some of that trend with the retail death knell and how that might affect someone with such a large footprint like that, and especially with hard corners all over the United States, some of the best located real estate. I mean, that was the strategy for Walgreens. Hard corner, the highest traffic corners in XYZ location, with a very large facade, store, real class A presentation compared to what I remember seeing from like CVS and Rite Aid in the
Rite Aid
Philadelphia.
back in the
Yeah, it's
day.
just
Yep.
middle of the block, kind of weird, like nowhere near the caliber of real estate that Walgreens had. And I think that that strategy must have served them well for a long time. And I don't know if, what would be like your comments if you're allowed to say anything from the inside and how
Sure.
that
Yeah.
might be for the rest of the
Uh,
retail.
exactly. I'm far enough removed from it, and so while I have some experience having sat in the seat, I've also seen what's happened since. Now, keep in mind, and Dan, you said, oh yeah, from about 2010 on, right, things started to change a bit from a retail perspective. But remember, the iPhone came out in 2007. And it took a couple of years for retailers to get good, or at least start to provide a relevant and an acceptable experience, a shopping experience online. And everyone thought, whoa, 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 like this whole cell phone thing or online, it's going to replace brick and mortar. You heard the death knells of no one's ever going to go to a store again. And the truth was the retailers realized that the consumers were voting with their wallets. They were saying, you're either relevant and I want to spend money with you, or you're irrelevant and you're going to go on the dust heap of history and you're going to go away. And that applied to malls as well and to retail locations. So, the C malls have largely been bulldozed, and the B malls have largely been demalled, and what you're seeing now is more of a mixed use layout with live, work, and play. You're seeing gyms come in. You're seeing multi-family coming in as well. Quite interesting. From a Walgreens perspective, you're right. That the theory was, how do we get as close to 80% of the US population, right? How can we be 5 to 10 minutes from 80% of the US population? How do we drive our business from the pharmacy, back of house, and then really enable the front of house, which frankly it had insult pricing, right? When you looked at buying a Diet Coke at a Walgreens, it was because you were dying and you needed it and you're willing to pay anything. What happened with, again, so these two stories now come together, this confluence. I remember talking to the head of Dwayne Reed in New York City, which Walgreens owns, and he tracked a number of different items, and he was able to get 4 or 5 different items delivered by Amazon to his home cheaper than what he could get himself buying it in store with his employee discount. Now think about that, right? And so the consumer's not dumb. The consumer is very, very smart, in fact. And so they've decided to vote with their feet. There's this whole separate parallel conversation we can have, which is a little bit of a rabbit hole, but it's around organized retail crime. So in addition to having extraordinary competition with the front of the house that Walgreens was experiencing, and having price compression on drug costs from the back of the house, and getting proper reimbursements, there was a huge margin squeeze happening in and of itself. And then you factor in that there is a Tony Soprano of the dark supply chain that's literally sending people, armies of these, street urchins into stores, and literally just swiping entire shelves of product. And ICSC, which is the Retail Industry Trade Group, has done an analysis, and the impact to the United States is about $100 billion a year.
Wow.
Um, for Walgreens, it's about $4 billion a year. So
Wow.
now, for your listeners who go into a CVS or a Walgreens or a Target, and you see literally everything behind a locked plastic little door, it's horrible, horrible customer experience. But what's the alternative? Like having everything ripped off and there's no product? But there has to be a better answer to that. In any event, Walgreens has had a number of pressures to their margin. And so they tried a number of different things, whether it's primary care inside the store. That didn't work. They're trying to dislodge that. What you're seeing now is, and they announced publicly that 1,200 stores would be closed. Many of those are going to be natural expirations of a lease. In other words, Walgreens would initially open and have somewhere between a 15 and 25-year lease, and then have a series of 5-year options thereafter. And it was almost rote that you would click off those options. Sure, but we want to stay at that location. Now, what the company has said is, we're just going to let some of these stores just naturally expire, go away. We're going to move on. And we're really going to focus on markets and stores where we have the business, we have the pharmacy business, we have good front of house business, the real estate makes sense, and slim down from what was at one point over 9,000 stores to probably a chain that's going to be 5,000 or less.
Hmm.
I'm just supposing, but it probably needs to get there.
Yeah, it's interesting. I'm going to take a detour from our trends. And before we touch on some of the things you wrote about in workshop, I want to back up to the 30,000 foot level of like listeners who are building their own career are listening to this right now. And I believe I had it written down here somewhere. Maybe I didn't. Um, yeah, you were in capital markets. You were in brokerage. You were part of this rollout of several thousand locations in two different instances. And then you talked about being on the principal side. Were they like variously happening throughout your career? And maybe if someone's listening, should they also try to take a circuitous route like that and maybe do brokerage to learn and get the contacts? Maybe they should be going after some kind of executive level real estate job if that's what their training and background is, because there's a lot more benefit perhaps when you get to the principal side. And I'll just plug my side is I've always just gone to the principal side. It's like principal, principal, principal. I want to run the deal. I want to make the decisions. I want to take all the risk and hopefully make the gain on the upside. Would you have any advice to like somebody or maybe yourself just starting back out again of paying attention to one of those categories or doing it exactly in that same method if you had your choice and could wave a wand, you know?
Sure. Yeah. I mean, clearly you're smarter than I am. You went right to the
I don't know
principal
about
side.
that.
I was curious when I came out of business school. I went to UNC Chapel Hill, and I went to work for First Chicago, which is now part of JP Morgan, in the corporate finance group. And part of my thinking was I wanted to understand where the money came from, and how it worked. And that was 1990, so just knee deep in the S&L crisis.
Mm,
I showed up in the real estate department. All we were doing was real estate workouts. So it was a phenomenal opportunity to see how projects and developers had approached situations where, under one condition, things made sense. And then you had a major macro change being a crisis, in this case, the S&L crisis. And uh, and how that impacted the value of real estate, and how what people had to do to actually work out those projects, and who won, who lost. It was really, really interesting for me to see, because I had no risk, I had no downside, right? So I was learning. I was a sponge. I have had an opportunity to get entrepreneurial, to be that principal. And for your listeners who are true entrepreneurs, that can mean sleepless nights. That could mean making payroll. That can mean, hey, one thing goes wrong and everything could collapse. I mean, it's sometimes you're on a razor's edge, right? It's not always, as Scott Galloway says, champagne and cocaine when you're an entrepreneur. You're kind of up against it. And I've had situations where I've built several businesses that got to a point where I could sell them. And when I did sell them, I felt comfortable going into, for instance, going to JLL and being in a corporate environment. It allowed me to recharge my batteries. It allowed me to get a little bit more balance in my life. And it allowed me to think about next. And so, but all along the way, Dan, and I think you'll appreciate this, and I know it's been part of your success, is I've tried to collect as many people as possible. I've tried to be a good mentee when I was younger, and ask a lot of questions, and try to meet as many people as possible. It wasn't always easy, because sometimes it's a bit awkward. I had this friend who I remember, just remark. His name's Ken Marino, and he called me up one day and he said, "Hey, I just met this guy named Trammell Crow." And I said, "Whoa, whoa, 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 whoa!
nice.
That's a company." Like, he goes, "No, actually, it's a guy. I just called him up and said, 'Sir, I would love to come to Dallas and see you. Could I spend 15 minutes with you?'" And I thought, "You're not allowed to do that." And Ken, of course, said, "Of course you can," right? It kind of opened my eyes. And so for the listeners out there, there are senior people in the industry that would love to spend time with you, that give you 15, 20, 30 minutes. So that I think is a really important point. Don't be shy, collect as many people. And then when you start to get into our, my role in the industry, and you're approaching it as well, Dan, is like all of a sudden we become the mentor, right? I've always said I'm really nice to young people, because I never know when I'm going to be working for them, even though maybe they were working for me prior. And that's actually come to pass, interestingly enough. And so, this industry can be phenomenal. There's days where it might be, quote, hard work, but when you're doing deals with people you like and respect, and you're learning and you're making money, it's a super fun industry. And that's why making yourself available to industry groups, to conferences, to constantly learning, is vitally important.
I'm going to make a plug for the listeners who don't recognize Trammell Crow, the name. There's a great book that was written probably in like 70s or 80s, Trammell Crow Master Builder.
Exactly.
It must be on your shelf there because I see you looking around there, right? Ha-
Here it is.
He's shown on
Yeah.
the screen for those who aren't watching on YouTube. Trammell Crow Master Builder by Robert Sobel. This is hands
Yep.
down the best book I read, at least in the last 12 to 18 months. Hands down. So to get in the door, to even talk on the phone with Trammell Crow, I don't know if it was the father or maybe there's a son by the same name. Either one, we're talking about real estate development, American royalty, if you were. I think Trammell Crow is the largest real estate developer maybe on the planet besides like the
Well,
Chinese government right now.
the company, his son Harlan,
Okay, it's Harlan. Okay.
has been in the news a bit. He has a very good friendship with Clarence Thomas, but we won't get into that on this podcast. Uh, but Trammell Crow built his business and sold his corporate services side of the business to CBRE, which is really interesting. Trammell Crow still exists as a company, and they do development. But the things that Mr. Crow did early on were remarkable. You know, he was a visionary. He built some of the, you know, first industrial distribution centers in Dallas, and he built uh, these large exhibition halls in Dallas. So anyway, a great book. And I know that you're interested in books, but yeah, that's one on my shelf and one that's important to me.
Yeah, and I shared it partially, read the book, but the other part is look at the caliber that Ken Marino was able to contact by reaching up, let's say, as he was somewhere in his career looking for some additional inspiration. And the question I think I'd like to pull on just a bit right now is, Joe, what pro tips would you give to somebody in like Ken's position who is sitting here contemplating making the call? What's the process for that? What is the most organized approach for someone earlier in their career to reach out to someone they might want the 15 to 30 minutes? Because when people say to me, hey, I want to pick your brain, I'm like, sorry, I don't allow brain picking. That's not the format. But I'm curious if you have some tips on how that call may go successfully if somebody were to make that to you or someone else in some executive level position somewhere.
I always default, Dan, back to homework, right? You have to have a point of view. There has to be a reason. And what kind of gift can you provide to, uh, a Trammell Crow in return? In other words, you may be early in your career, but you know something. And because the world is changing so fast right now, if you're a part of the I generation, Gen Z, or you're a millennial, like maybe you have a different view or a thesis, a hypothesis on some real estate, and you say, listen, I would love to have a conversation with you to share my thoughts. I'd like to learn from you. And by the way, I think it's really vital to be authentic and to be vulnerable and to share aspirations. In other words, if I called you up, Dan, I'd say, listen, I want to learn about being a principal. This is where I am so far. I've made some mistakes. You can commiserate, but really get to the crux of it. What is it? Come up with a thesis or an approach. Have your homework done. I sit on the advisory board at the University of Florida's Bergstrom Real Estate Center, and I have mentees every year, and I find myself having more conversations with students who are not my quote official mentees, but they've done their homework. They've either read my book, or they're interested in retail, or they approach me after one of my lectures, and they have really interesting perspectives that they want to test and say, is this on track, or am I thinking about this the right way, or what am I missing? And so that type of engagement, for me, is healthy. I also want to prepare because I want to get something out of them. I want the perspective. How are you looking at how are you looking at jobs? What is your view of an office? How are you shopping? How much are you buying off Instagram? Instagram ads. When's the last time you went into a bank? Are you physically going and engaging in physical banking, or is everything electronic? So there has to be this two-way street.
Yeah, I love that. And it's like if I summarize it, I love the be prepared thing, do your homework. I wouldn't I wouldn't take the call. I wouldn't schedule the call if someone didn't, and it was kind of this blind pick your brain thing. Like, sorry, I'm tied up, I'm busy. But if somebody's done the research and has, as a podcast host, I'll get like a, hey, your last podcast was great. Nothing else. Like, yeah, that's copy and paste. That's not, you did your homework. And then the other part of the gift or adding value, I think to summarize that, have some kind of agenda and how much time you're expecting. Hey, can I get 15 to 30 minutes on a phone call? I'd like to talk about this, this, and this. Here's what I'm thinking on this. Do you have time at 3 o'clock tomorrow, or would next Wednesday at 4:30 be better? Two times, two dates, very specific to allow the other person to not get caught in the trap of, oh, can we do this sometime? Oh, yeah, sure. When do you want to do it? Oh, no, 12 doesn't work. Oh, how about this other thing? Sorry, but like five different replies for the busy executive is going to be overwhelming. I want to make it very simple for the person I'm reaching out to know what's going to be talked about so they can also prepare, which is the reason I want the agenda. If somebody were to reach out to me, I want the agenda so that I can be
Yes.
prepared and make sure, hey, maybe I'm not the right person to even have this conversation. And I can let you know that and maybe even give you direction to who may be the right person.
Hmm.
But yeah, simple bullet points and be sure to provide two times and dates you've committed to so that it's very easy for them to just confirm that date, throw it in their calendar. They can touch the email one time and then you can move on to the 15, 30 minutes or whatever. Whatever the case is. My final simple one, Joe, would you prefer they reached out that way for a 30-minute phone call or the lunch date?
Yeah, I would say the 30-minute phone call. It just I travel quite a bit, and so the thought of nailing down a lunch date is difficult and remote. You could ask my wife. So I think that's a that's a brilliant aspiration if you could get to that point, somehow having a face to face. If you know you're going to New York City for a conference in the second week of December, you should have your list of people that maybe you've talked to and say, listen, can I just buy you a cup of coffee? It could be in the morning, it could be in the afternoon. And I do think there's enormous value of having that face to face, having a handshake, having eye contact in person. There's neuroscience behind it that makes the bonds even more stronger. The oxytocin that exists between two people when they're together, not when they're two dimensional and on a podcast or on a call. But I'll be in Chicago soon, so I'll track you down. But
Nice.
um, I think there's an aspiration for you to get together for a coffee or a lunch, but probably initially, if you can crack the code with a call, you're doing really well.
Yeah, you're right about that. All right, cool. Workshop, the book you had written. Did you co-write this with an author? Did you sit down and hatch this over a period of years? What was sort of the genesis for the idea and the thesis of the book?
Yeah, I had the idea, and I had written a number of articles and had a number of presentations and speeches. And I left the Instant Group in June of 23 and took about a nine month sabbatical. And during that time, another thing that I believe is vital for everyone, it doesn't matter where you are in your career, is to have a growth mindset and to always be learning. And so I had this opportunity, and I took a course at MIT in AI and business strategy because I wanted to learn more about what was going on. And I took another course at the University of Chicago on behavioral economics. There's only been five Nobel prizes in economics awarded in and around behavioral economics, and I thought that if we're going to focus on consumers and people, then it's going to be important to understand behavioral science and what motivates people, what incentives work, and so I've been really absolutely interested in this area of behavioral science and behavioral economics. And so sort of went to the source and took a course in it. And between those two, it helped form a bit of the backbone for the book. I wound up writing it myself. I had a great publisher editor called Grammar Factory. So, you know, if any of your listeners have ever considered writing a book, it's not as hard as you might think it is. And there are companies out there that can really help streamline it. Grammar Factory, it's based in Montreal, but again, a global company. And Scott McMillan, who's the CEO, is just fabulous to work with. It was affordable, great value for money. My editor actually was in Perth, Australia. I never met her, but it didn't matter because we were operating asymmetrically, and I'd write something and then she'd look at it while I slept and then came back and forth. So that's the genesis of writing the book. It wound up, the whole process was probably 6 months. And I wrote it because A, I always wanted to write a book. I think you should have big life goals. B, I thought that I had something to say and I wanted to share it. And I wanted to provide a different point of view. And probably the best way to encapsulate my thoughts is just by an example. And oftentimes in real estate, we see the ribbon cutting, right? Which is great, cut the ribbon, job done, let's go play golf. And in this new future world, I argue that the ribbon cutting is literally the beginning of the process, because space is being used differently today, and the consumer is voting in how they spend their time and money. The consumer, we know for a fact that the consumer is voting with her wallet in retail, and if you're not relevant, you're going to go away. But if you are relevant and you stay current and you engage in the personalization, and if you're engaging with Aloe or Lululemon or Apple or just name it, Restoration Hardware, RH, they're getting custom, they're getting hyper personalized. They understand your buying preferences. They're engaging with you on different levels. In many respects, some of these retailers are now movements that we all want to be a part of, like Apple. Uh, the question then remains, how is the office class going to react now that consumers, who are the employees are the new consumers, how they're able to vote with their feet as to when and where they work? Now, assuming that you're not working at a call center, or you're not a surgeon, if you're operating in the conceptual economy, your tool and trade is a laptop or a cell phone, you really can work from anywhere. And so why are companies like Amazon mandating that people come back in an office 5 days a week, right? And if part of it is to drive culture, well, culture is based on trust, and what way to erode trust faster than to issue a mandate? Because, like, why hire adults and then treat them like children? And in particular, because the employees who are going and working at these companies are the same ones who have for 10 years engaged in agency, autonomy, and optionality in how they spend their money. And so what we learned through the pandemic was that many people thought they hated their job. Turns out they hate their commute, right? In Chicago, I lived in the western suburbs, and if I had to go up to the North Shore to Walgreens, it could take anywhere from 40 minutes to 2 hours each way. And so that's a massive trade. Um, so that's why I wrote the book. I think there's a lot of important things that are in the book, but I really talk, Dan, about this notion that shop at one point was literally a place you went to. It was a noun, and then because of technology, it became a verb. And then I argue that work is likewise going through that transformation, right? It was demonstrably paired up with office. So if I said, Dan, I'm going to work, that meant I'm going to an office. Today, those two are decoupled, and work is a verb. I know that sounds obvious, but it's no longer a noun or a physical place. It's a thing we do irrespective of place. Now, it can happen in an office, it can happen in a satellite office, it can happen in a WeWork, it can happen, it can happen in an airport. It can happen in lots of different places. And so we have to be mindful of that. I think there's a sunk cost bias that a lot of companies have, and I'll use Amazon as an example. They own $50 billion worth of office space. And darn it,
Hmm.
people need to go there. But other companies who aren't saddled with that much in terms of fixed space can be really smart about how they offer an ecosystem of places for people to work, and then you can expand your employee base. You can get mothers, who are caretakers. You can get adults who, people who are caretakers, whether it's young children or older parents, can remain in the workforce and be productive, but they're also going to operate at different hours too. And so at the end of the day, if you're in the conceptual world, if you're tool and trader ideas and analysis, or creating products and things like that, do you really have to be in an office 9 to 5, Monday through Friday, as if we're still in the industrial era? Like those are kind of factory constructs, and so things have to evolve. So part of what I wanted to do in the book is just give some historical context, talk about how retail is learned, and give some thoughts to what office and the world of work should be looking like for the next couple of years.
Yeah, I'm excited. I ordered the book already. I always get the hardcover. I like them on my shelf for the future. Um, the sunk cost theory is interesting with the mandate. So our business, we have maybe 22 acquisition people on the team, spread between three offices in the Atlanta region, Chicago, and the Philadelphia region. And we were 100% remote when this thing started, 8, 9, 10 years ago, and we like started forming the organization. And then we got offices, 2016, some small ones, 2018, 2019, a little larger, and now we're in some pretty decent sized spaces, 5 to 10,000 square feet. These are not, WeWork size type of offices. And that comes with overhead. And I notice I get feedback from the team that they do find they're more productive. They're a little more creative in office. They're more savvy on the phone. They're kind of showing off for each other. And so we get this office culture where we do have a generation of more productivity and creative results that occurs there. Because invariably, whether it's Netflix or the fridge or it's dinner time or, there's an Amazon delivery at the door, there's a lot of interruptions that would occur in the home environment versus the office. So we're not like 5 days in the office required. We're probably like a few hours here and there, 3 times a week. And then there's probably all day Monday and maybe half a day on Friday or something like that. And a lot of our business actually happens out on location at the physical property that we're making the deal occur. So it's not like we could 9 to 5 and do it all from inside the office. So I wonder to myself out loud, I guess with everybody, I'm not wondering to myself, but it's like, what is
So
that? Yeah, what is that right balance between those who are disciplined to be effective in the home office environment versus those that maybe didn't spend years developing that home office environment, who just love working at home, who are probably more susceptible to the interruptions because they haven't really thought through and built out the home office environment versus the people who are easily capable of producing the same amount at their home office environment versus the office. And I think the office has its place, um, maybe for the people at the earlier end of the career where that's there, the momentum's there. There's people around them who've been doing the business for 5 and 10 years. And in their first year or two, they will no doubt make more deals, more productive deals, lose less money on behalf of the company when they're operating out of the office. So I think it's a push pull. And I wonder, where is Amazon's heart at? Is it the $50 billion dollars in sunk costs, or did they start to notice falling off of the creativity and the effectiveness? Who knows, right?
yeah, and I love that you bring up effectiveness, because in the conceptual age, kind of this new collar economy, is it really about productivity or is it about effectiveness, right? So if I send out 100 emails and I call you up, Dan, and you're my boss, and I was like, "Hey, Dan, I sent out 100 emails." and maybe none of them, I could, say I've been productive and I've worked my ass off today, but maybe another day I send out 3 emails and 2 of them, turn into deals. And I also got to play 9 holes of golf that day. Like, do you really care? And I'm not here to say it's all about work from home. What I'd love to emphasize is that hybrid work is the flip side of the coin of omni-channel retail or hybrid retail. And what we've seen in hybrid retail is about 20% of the time, 20% of total retail sales of $3 trillion are happening in the e-commerce channel. And what we're dealing with is these multiple channels of how people are spending their money. I think there's an equal and opposite example in how people make their money. Do we need to be Monday through Friday, 9 to 5 in an industrial era construct? I don't think so. But I think what has happened is that we have generations of Dilbert middle managers who have determined that if you're sitting at your assigned station, you are therefore being productive, which is complete and utter bull hockey, right? I mean, it's just not true. And so I argue that leadership is greater than management, that we need leaders at all levels who are helping drive the company mission and mandate, who help define what being effective is, who then surround younger people with resources and even mid-career people with resources. Michael Jordan needed a coach, right? Tiger Woods needed a coach. Everyone needs a coach. How many coaches are out there for the middle managers that we have? Very little, unless someone has some get up and go and they're reading books and they're listening to podcasts like yours and they're doing a number of things. But by and large, so I argue that leadership is greater than management and that you need to focus on that. I argue that effectiveness is greater than productivity. And so if I think being in an office is fantastic. If as a young person, you want to be in an office, right? It's generally a target-rich environment to find a mate. It's where you find your friends. It's where it's where you develop your social networks. It's vital. It's where you learn from the silverbacks that are in and around. And then for middle management and even more senior people, you're able to give back. But what we're seeing is this desire to have more of this experience happen in in office settings as opposed to just sort of passive attendance. So purposeful presence over passive attendance. And during the pandemic, we were doing some research and I heard this phrase that I loved and I carry it with me and it's in the book, which is a philosophy that on-site is the new off-site. So when we have people coming together, is there an agenda? Is there a meal prepared? Is there a guest speaker? Are we challenging each other in a different way? I think mandates are an intellectually lazy, blunt instrument, and that we have to get a lot smarter to provide incentives for people. This is where it goes back to, Dan, this whole notion of behavioral science and behavioral economics. What are the nudges that can get people to make the decision to be in an office? And if it's an environment where everyone's there, if it's an opportunity where if you're not there, you have to opt out, but otherwise everyone's opted in and going to be in the office, or if there's something that can sway you and make the 2 hour commute a day worth the trade, people will be in the office. I know there was a law firm in New York, and they had this mandate one day for everyone to be in the office, and out of 120, maybe like 58 showed up. And by the way, right? There's no bite or bark in the event people have miss a mandate. No one's people aren't there's not wholesale firing going on unless you're Elon and you want a complete reduction in force, which he did at Twitter. Uh, but that same group had another event 2 weeks after, and there was a social event after, call it business hours, And out of 128 people, it was like 115 showed up. So it's not that people don't want to show up, but they want to show up for a reason. So if you mandate that I have to come to an office and commute 15 miles each way or take public transportation, and I'm sitting at a cubicle and I'm on a Zoom call that I could be doing from home, and I could have seen my kids when they wake up. I could have helped get them dressed. I could have been on the Zoom call and then I could see them when they come home. I think there's this really interesting push pull, like you said, that goes from work life balance to life work balance, and you can still get some of the same things done.
Yeah, I love it. I could go on this. This is a hot topic. Debate it. We're looking at office assets. We're passing on everything. Some friends of mine have bought some very, very cheap, $10 a foot for like Class A space and Class B plus, if not Class A minus locations. Just phenomenal deals, and they're gonna make a shitload of money, and it's going to take 5 to 10 years. And certainly for the next 24 to 36 months, it's probably not going to be fun for them to own these assets. But I think you're right and spot on, Joe, with the experience being created, people rethinking, turning this into more of the omni-channel retail model, right? We have to evolve what the office is for and what we're doing in order to attract people back to the office. But I'll digress, and we're going to shift gears here a little bit. So you recently joined as a partner, LRG Investors, and you guys have in, I believe, in portfolio, shopping centers with grocery anchors, things of that nature, and have done quite a bit of tenant-driven development, which for those listening, that's kind of what Trammell Crow built a significant portion of his business on, who we were mentioning earlier. The tenant comes, says, I need 100,000 square feet. The landlord builds the 100,000, has the lease lined up, the tenant day one. It's a phenomenal development strategy if you can do that right. Would you mind pulling on the thread of the decision to join LRG and what you guys are anticipating doing over, let's say, the next 18 to 24 months, Joe?
Sure, happy to. Uh, LRG is the development and investment arm of Lockhouse Retail Group, which was founded by my friend Steve Cutter. Uh, he partnered with Josh Amoroso, and so they've built both companies. And again, this goes back to my earlier point of collecting people. I was doing deals with Cutter, geez, 25 years ago easily, if not more, right? And we've just become friends and colleagues and have a great deal of mutual trust and respect. And so when it came time for me to think about doing something next, he and I always talked about doing something. And so with Josh and Steve, now we're together. Um, what uh, what the company has done over the last 3 years, 4 years, is really focused on acquiring grocery anchored daily needs centers that have some adaptive reuse and some uptick in rental rates and out pads and things of that nature. It was really difficult to build ground up over the last 3 or 4 years. Is rates were high, input costs were crazy, labor was off the charts, and it was a really difficult time. We've seen a number of areas ease. Now, clearly, we've had a 50 and then a 25 basis point drop from the Fed. We haven't really seen a reaction in the 10-year. In fact, the 10-year has actually gone up. But we're seeing more dollars, more equity capital dollars chasing retail deals now than we have in the last 5 years. And that's for a number of reasons. One, there's been over 100 million square feet of supply taken out of the retail equation. And those are the old B malls. It's the last Kmart closed, if you can believe it, just this fall. I say that, and most people say, "Holy crap! I didn't even realize one was open still." But in any event, uh, you know, you and so now you have a number of retailers who are in a growth mode, And the jet fuel for those retailers is net new stores, right? And adding to the store base. Starbucks is still blowing and going. The banks, I mean, Chase is opening up. I think they added something like 250 or 300 new bank branches. We're seeing companies like Kava coming into the picture. Their stock's up 300% since the beginning of the year. Just wish I would have bought it.
Wow.
My friend Jeff Gall is the chief development officer there, and they're blowing and going and doing great. And it's interesting because what they're offering is this Mediterranean. Have you been to a Cava? Are you
Not
familiar
no,
with?
not yet. What? Tell me about it.
Yeah, think Mediterranean menu in what looks like a Chipotle, right? So you have the whole lineup, the walking line to construct your pita or your bowl or whatever. Super healthy food, reasonably priced, great lifestyle. And these guys are blowing and going, and they need to expand. The grocers are still expanding. The Sprouts of the world. We talked earlier about Trader Joe's. You're seeing Kroger and Publix just following the demographics. I'm here in Northeast Florida in Jacksonville, and you start looking at places like Daytona, which harkens back to spring breaks and racing cars. There's like 10,000 new houses going in the Daytona market. It's like staggering. There's 1,200 people a day still moving to Florida. So there's a great opportunity to capture some of these demographic shifts, to help meet the demand of growth. And so we feel like inflation has subsided some. We're seeing better pricing, not super great yet. We tend to be looking at single tenant build to suit. Multi-tenant buildings under 10,000 square feet still don't really pencil great. Over 10,000, probably, we're seeing better probabilities, but we think that our thesis is that the environment's going to continue to get better. I think the election means that carried interest is probably going to stay put. Taxes are likely going to be reduced. Regulation will be reduced. Hopefully, inflation on inputs will come down, and so it'll start making a lot more sense. The capital markets are really strong. Banks want to lend to retail. That wasn't the case 5 years ago. I was at a ICSC trustees meeting, and one of the phrases was, "Thank God we're not office," right? Because there was a long time there where retail was out of favor, but it's now back in favor. And so, we're looking at opportunities across the country. We have great coverage along the West Coast, Rocky Mountain, West, as well as the East and the Southeast. So we think that there's a place to be and to help clients grow and to make some money.
So the trend in retail, uh, I guess the new ground up developments I know of, personally, a friend of mine built a Starbucks, came out of the ground, and that was under construction, I think, last summer, maybe.
Mhm.
I'm sure they're serving coffee right now. Another friend of mine just signed with Seven Brew, so it's a drive-through concept, red hot. It's actually they're trading at lower cap rates than Starbucks right now. Who else do I have? Some car wash buddies who built, 15, 16 of those maybe in the last 36 months, but they're small, right? It's 2,000 square feet, give or take, maybe 4,000, really small developments. I don't know of any shopping centers, 100,000 square foot, 80,000 square foot that have gone ground up anytime at all recently. Now, we had a lot of that built in the 2000 to 2008 era, so we were probably well oversupplied during that time period, just like offices now. And then the bigger boxes, I don't know, maybe you would have a little more accurate number, but are you seeing the grocery concepts also where they maybe used to be 35, 40,000 square feet and now it's a 20, 25,000 square feet? Like what are the trends in terms of the actual size of the store? Have they been shrinking the footprint and becoming more effective with inventory turns and, the iPhone, the ability to order, or stable? Like what kind of insight could you provide on the size of the stores that maybe were developed in the last 3 years and what you'd expect to continue over the next 3 years as the development marketplace hopefully becomes a little more favorable?
Yeah, that's a really good question. I would say I'd point to Target. Target was very busy doing a lot of their in-city targets, reducing their footprint, trying to go on college campuses in high-dense urban areas. And they came up against some of the same challenges I mentioned earlier around organized retail crime and, real difficult to operate on their philosophy going forward. And I believe they announced over 100 new stores. They're reverting back to their 125,000 and 135,000 square foot, really large prototypes. And
Wow.
again, it goes hand in glove with the hybrid retail because as much as the four wall experience is well lit and great, and the associates are fantastic and have a smile on their face, it's also a last mile distribution center too, right? So people are buying online, either having delivered to their home or buy online and pick up in store. So you're seeing more and more of these opportunities where, hey, I've got two bagfuls that I need to pick up at Target. I text them, pull into parking lot B. Someone comes out, puts it right in my trunk, and I leave. Right? Great experience. So we're actually seeing an increase in some stores, and we're seeing retailers test and learn, and that is a really important lesson, to see how the consumer is acting and reacting on different examples. So a lot of A/B testing going on. It's difficult to do with a capital asset as expensive as a piece of real estate, but if you're a national retailer, you can test some things in one market, get learnings, and try something different in other markets. So I think that's really important. The grocers, 50, 60,000 square feet. Uh, Walmart is back out again with their neighborhood market, a little bit reconstituted. Um, but again, a super strong anchor that can help drive a lot of other daily needs. So I am now, for the first time, starting to see potential for ground up grocery anchored centers. Starting to see site plans circulating and deals being talked about. So it's
Are
kind
are
of
those deals in proximity to, let's say, was it is Daytona? I think is Daytona. We had a 250 lot subdivision I'm an investor in where we're selling that to, I don't know, Pulte or something like that. But if I imagine that going in on the outskirts of Daytona or whatever the big city is, are those projects you're seeing located near those newer development sites, I'd imagine?
the new housing development sites.
Yep.
Absolutely. There's a really interesting project called Margaritaville, that's residential in focus, and I think there's probably less than half a dozen of these Margaritaville. There's one by Hilton Head. There's one that's on LPGA Boulevard by Daytona. And these things are just sold out. And now there's the next Lennar or Pulte or whatever is going. DR Horton is building next to them. And then, you have the initial public center that's phase one. And now all of a sudden phase two is happening. And, you're seeing all this happening in almost a step curve, right? And as more and more people are moving full time to different parts, particularly the Sun Belt, the daily needs retailers have to respond.
Yeah, it makes sense. So, one question on philosophy. A lot of times, I mean, I don't know how true it actually is or whether it holds up. I thought I was a hold my rental portfolio forever kind of guy. I'm buying things, I'm holding them forever, and that's what I'm going to do. I signed a deed package for one yesterday. I have contracts on the others. I can't wait to sell them all off because I'm kind of going into the partnerships where I'm a little more passive instead of dealing with the day-to-day management. Curious, Lockhouse Retail Group, LRG Investors, the philosophy in terms of hold everything forever on one side of the scale, and then on the other side of the scale, maybe is buy it, get it stable, and immediately take it to market and cash out. Where do you guys fall in terms of the own forever or kind of flip and get out of it philosophy?
I would say there's two different flavors. One, the grocery anchored center, the daily needs centers, we tend to hold those a little bit longer, allow them to season, give us time to lift the rates. We typically look at a 15% uplift in rental rates. We try to capitalize or redevelop out pads and create value. So a little bit longer horizon there. And then as far as the single tenant assets go, given where the capital markets are today, we're more in the churn and burn mode where it's almost merchant building, right? So we're going to build them and then take them to market. And so it depends on the asset type, but it's a mixed approach.
Yeah, and I mean, if we look back at Walgreens, I mean, you build it as a merchant, and from the outside or the inexperienced observer, you'd say, "Oh, you'd want to hold that forever. That's Walgreens." And then look, if you held it forever, they're letting the lease expire on you, and like, what are you going to rent that out to? A daycare center? Like, what goes into the corner?
Yeah,
Very difficult to backfill, and that was one of my own lessons over the last 24 months is that nothing lasts forever in a sense. So you get this great collection of national tenants, solid credit, um, strong cap rate, and you have a length of term left on the lease. You got to sell it while it's marketable because if you get down to, someone brings you that same Walgreens deal and there's 2 years left, 3 years left on the lease, sure, you'll get the loan, but you're guaranteeing a 3.9, $3.8 million mortgage on a $5.2
right.
million purchase. Uh, Not a comfortable position. That's why the owner is selling that asset because the lease term is at the end. So yeah, I think that's great. That's a great model. We just
Yeah.
filled our Vegas shopping center, and I think we're either going on the market by the end of the year or we're going on the market early 2025. And some of the retail numbers that we're seeing is like you're actually selling on 12 more months after you own it. So it's like this projected pro forma seasoning thing. And there's literally buyers out there in the
Interesting.
market who will pay it to maybe be in there as the demographics are improving and maybe it's a
Hmm.
location and they'll laugh at us for selling it at the price, 4 years from now, maybe. But it's just interesting to see the trend of retail properties getting hot again.
And there was an interesting article in the Wall Street Journal this week on November 12th about how the real estate scions in New York City are breaking the cardinal rule. They're actually, which was never sell, but they are having to sell. Rudin was one example, and a handful of others. So, yeah, I mean, nothing's forever. That's sound advice.
True enough. So as we wrap up here, I have a couple more questions before we close. First would be book recommendations. We talked about Trammell Crow earlier. Are there one or two other books, maybe real estate related or otherwise, that you found profoundly impactful, might be interesting to the listener?
Yes, one is around behavioral economics, and it's called Nudge by Richard Thaler and Cass Sunstein. Thaler is a Nobel laureate in economics. His buddy Sunstein is a professor at the Harvard Law School. And this is a really important book. I recommend it often. Um, and so it talks an awful lot about how uh, you can engage in choice architecture to help people make good decisions without taking the agency and autonomy away from them. And I think this is going to be a really important area for us to focus on. We can't be that intellectually lazy, blunt instrument when it comes to dealing with people interacting with our real estate. So how do we nudge them to really come back into our space? And The second book I would mention is probably a little bit more personal, but it's called Build the Life You Want: The Art and Science of Happiness. And it's written by Arthur C. Brooks, uh, with Oprah Winfrey actually. And but Arthur Brooks is the most popular professor at Harvard Business School, and he teaches a class on leadership and happiness. And I've found his message to resonate, and to be really important as we navigate really difficult times. I'm on the board of my national fraternity. I'm the president of the board, responsible for. I've got 11,000 undergrads, and I have a 22-year-old son as well. So I see what's happening in the world with these kids. We're in an epidemic of loneliness, anxiety, depression, self-harm, non-accidental deaths. It's not something that we should be proud of as a society. And so we need to arm, not only ourselves, but we need to help arm our younger people with tools to be more resilient, to be more anti-fragile, to know that you're going to have bad days, and so how do you deal with them? And so these lessons about happiness, that Arthur Brooks talks about, are really, really impactful. And so I've had a chance to meet him. I'm actually working with him with the National Fraternity as we take some of his lessons and bring them into the associate member education process. So again, just another area. We can't have successful real estate unless we have successful, functioning, energized, entrepreneurial, enterprising people to either shop or work in them. So that's just another area that I'm pretty passionate about.
Fantastic. Appreciate that. We'll have to get those ordered myself. So, the crown jewel of wisdom, if you could go back, let's pick a good point here, a good way to kind of phrase this question. Because we talked a little bit about the principal and the banker and the brokerage side of things. Let's say you were starting with, zero today and you were one of the young people in your fraternity, Joe. What would be the crown jewel of wisdom that you would share with them, knowing everything you know now?
Yeah, it might sound like a broken record, but I'd go back out to, who are the most successful alumni out there, and how can I go and engage with them? Uh, there, I mentioned earlier about the University of Florida, the Bergstrom Real Estate Center. Well, it turns out that Kelly Bergstrom, who's the benefactor, was the president of J&B Realty out of Chicago, and is a fraternity brother. And so not only have I, but there's been an army of young men who kind of went and worked at J&B, who got to learn under Kelly. So find a mentor, find a leader, and learn as much as you can. Sweep floors, fetch coffee. There should be no job below you. Show up early, stay late, and just work hard. 90% of winning is showing up. The other 10% is not leaving till you're done. It's almost like sending a handwritten note today. It just stands out, right? And so if you do that and you just work your ass off and don't expect anyone to give you anything, and you're just going to outwork the next person, I think it'll serve you well.
Yeah, and that ties into kind of our conversation earlier about doing your homework and reaching out to that person for some insight. One thing I think I would have had challenges with when I was 18, 19, 20, 21, I didn't have enough perspective to maybe even select the right mentor. Like if there was some guy who had five rental properties, he would have been like the king of the hill, and I would have been ready to worship at his feet, for lack of a better. I would have just thought he was, the pinnacle. What type of strategy advice would you additionally layer on for that person around trying to figure out who is maybe the right people to go out and contact? And maybe that's like step one. You're kind of asking the first mentor you identify, something like that. But how would you go about maybe selecting that person that you invest the time, do the homework, come up with the agenda, and then schedule and do the meeting.
You know, it can be that formulaic or it can be super opportunistic. And I'll give you an example, Dan, and you'll appreciate this from our Philadelphia background. So, as a kid, I thought the best job in the world was being a caddy. And so I was a caddy at the Philadelphia Country Club. You're outside, you get paid in cash, getting a little workout, you meet interesting people. Well, there was a member guest, and this gentleman named Tony Hayden. For those in Philadelphia, he was the head of the Cushman and Wakefield office. I was his caddy. And the very first day, he looked at me and said, "You're going to for caddy, as much as you want, ride on the back of the cart. We're just going to have a good couple of days here. And oh, by the way, here's $100." And that was like, I don't know, 40 years. It was
A
$100
lot of
was a
money.
lot. That was a lot of money, and I said, "Wow, Mr. Hayden, this is awesome." And I was studying electrical engineering at Villanova. That's where I got my degree in. But I got to interact with him. I asked if I could come interview with him, which I did. And again, there was just that opportunity. He looked like he was having more fun doing real estate than what I saw people doing in engineering. So it was my golf game still stinks, even though I live on a golf course. But in any event, I just think you have to be open to it, and you've got to do these people match your goals and aspirations, your character, your ethics? Like, does it feel good? And if so, probe and ask questions. And it doesn't have to be like a master's thesis on day one. It can just be a couple of questions and then follow up and work the angle.
Yeah, maybe it's as simple as just sitting down and thinking it through. No one gave me that idea when I was heading into Villanova, and I remember my mom's like, "Just fill out the application, you might get in." I'm not getting in. I just want to. I was working at a car dealership. All I wanted to do was drive the brand new Trans Ams that they were delivering every
Oh
day,
yeah,
like
oh yeah. With
$9,
the
whatever.
eagle on the front, right?
Yeah, yeah, $6 an hour, seven, whatever it was. It was like it didn't matter. These cars were so much fun that I had the chance to drive. So I filled it out and I thought, well, I'll just design cars. So I'll be a mechanical engineer. And I checked the box. And then when I got there, I had sort of the similar experience. I had always wanted to do real estate since I was a kid. Grandpop was like a property manager and, did the early math and figured out that was a really good plan as far as making money. But when I looked around at mechanical engineering, I had no idea what it really was, what I was getting into. I was like, oh, I don't know if I want to do this actually. So sitting down to think it through is a great point. And then maybe the action item is, and they did tell me this. Someone told me this back when I was that age. Go caddy because you'll meet the interesting people. Well, there you go. There it is. Go caddy and you'll get at least 6, 10, 15, 20 in in a summer's worth of caddying, interesting conversations to help develop the strategy. So Joe, where can people go to get more Joe Brady?
Well, you can go to my website, which is joebrady.ai. On the website, there's links to Amazon and Barnes and Noble for the book. There's some links to articles I've written and podcasts and presentations that I've done. So joebrady.ai.
And my final question, Joe, what is the kindest thing anyone has ever done for you?
Uh, when I was first out of college and working in Charlotte, North Carolina, I was working for my national fraternity actually, and the executive director, one of my lifelong mentors, Derwood Owen, uh, knew that something went awry with the local bank branch, and he grabbed me by the collar, took me in there. Somehow they were taking advantage of me, and it was just a horrible experience. I tried to forget it, but he brought me in, sat me down in the manager's office, and literally ripped this guy up one wall down the other and basically said, "You don't know who you're dealing with here. This young man is going to be a leader of tomorrow. He's going to be one of your biggest depositors here. You should rectify what happened. What you did is wrong." And I never had anyone stand up for me like that. I never thought I deserved it until that time. And so, you know, I just felt that kindness and support allowed me to stand a little bit taller that day, and I never forgot it.
Nice. Joe, I have like 4 pages of notes. I had a fantastic time. I appreciate you coming on the show.
Dan, it was so good to be with you, a fellow Philadelphian to Chicago, and I wish you well, and I hope to meet you live someday.
All right, we'll get it done.